Hello, I'm doing a video on investment companies. Now, basically, investment companies, they can be either investing in properties. If they were to invest in property, that means usually they will earn rental income, or they could be investing in shares. If they do, they will be earning dividend income. Right, investment company actually comes in three formats. It can be either called investment dealing company, investment holding company, or 10E company. Right, so I'm going to explain to you the differences between the three types of investment company, and I'm going to use the scenario of property investment to explain to you. All right, so if you are a investment dealing company, so basically you make and sell investment, which means to say the investment is a property. So you actually make and sell your property, and your property is known as trading stock. Trading stock, in other words, this is referring to inventory. So if you buy and sells inventory, usually it will be subject to tax, and the income that you will earn from selling and buying the inventory, which is for this case properties, will be taxed under 101A. Okay, so it's like a normal trading company. Right, now in the event if they have properties and they rent out the properties, the rental income will be also taxed under 101A. So in other words, the income that investment dealing company earn will be trade income, 101A income. So what about expenses? Can they claim deduction of expenses? The answer is yes. You will follow the normal deduction rule. Expenses will be deductible if, for example, it is revenue in nature and it is incurred for the purpose of earning this income, and it is not prohibited by Section 15. Now, losses, can they claim? All right, now in the event if they incur trade losses, firstly, you are allowed to set off the losses against other income that a company may earn. All right, other income, because this company may have non-business source income, so you can use it to set off. And if all the income becomes zero, they can set off against, or rather, in the event if there are still losses, they can actually utilize the losses in terms of transfer, carry back, and carry forward, which you will learn in another topic. What about CA? Can they claim? The answer is yes, because after all, this is a trading company. They earn 101A income. So if you are a trading company, you can claim CA on the asset that is used to earn that trading income, the trade income. And in the event if there is unabsorbed loss, or rather CA, you can actually set off against other income. And also if you still have balance, you can transfer, carry back, carry forward. So it's basically the same as what you see here, all right, for losses. Okay, so that's for trading company. Now for holding company is different. Okay, it is akin to non-trade business. So when you're called a holding company, that means you're holding on to your investment for long term. In other words, you're holding on to your property for long term, and your property will be known as non-current asset. Okay, so when you dispose non-current asset, in tax, we say that it is capital in nature disposal. So if you make any gain, the gain on the disposal will not be taxable. All right, now, so however, do take note, because you're holding on for long term, so it is likely that you will rent it out to earn rental income. So in the event if you earn rental income, that is when you rent out the property, right? So this investment holding company will earn rental income that is taxed under 101F. Right, so so the first column, they will earn under 101A, whereas the second column, the rental income is earned under 101F. All right, So what else you need to take note? Can they deduct expenses? The answer is yes. However, expenses that are allowed to deduct will be restricted by the rules. So what rule when am I referring to? Now you have to look at the next page. So as far as the second column company is concerned, the investment holding company, they can deduct statutory expenses. So statutory expenses means expenses that are by law you have to incur. So example will be audit fees, tax preparation fees, and so on, because by law you have to keep proper records of your accounts, and you have to make sure that your tax documentation is properly done. So if you were to incur all these expenses, which is what we call statutory expenses, you can actually claim a deduction, no issue, nothing is being restricted. Direct expenses are expenses that is traceable to that investment property. So if you are able to trace the income, or rather the expense, to that property that is producing that, or rather incurring the expense, then you can claim a deduction, right? So example will be mortgage interest expense that is linked to that property. Okay, now the thing that is restricted, the expense that is restricted, is actually your overhead. In other words, your indirect expense. That means you are not able to trace it directly to the investment property. All right, so by right you're not allowed to deduct, but there is a concession. Okay, and what is a concession? 5%. You are allowed to deduct 5% of this, gross rental income from a property that you are holding on to. So you calculate the amount based on 5%, and the amount will be an amount that is deductible as far as overhead is concerned. So this is the part that we say that is being restricted. Now, how about losses? Well, because it's a non-trade loss, so as a result, consistent with what we have learned, non-trade loss will be forfeited. All right, this is nothing new. Okay, and next, can you claim CA? Well, because you're not earning 10(1) income, so you're not allowed to claim CA, right? If you are an investment holding company. Okay, so far so good. So first column is what we call the investment dealing company, the 10(1) company. Second column is called a non-trade, all right, or in other words, investment holding company, all right. These are what we call the passive income, right? They are earning passive income. Now, the third column is a little bit confusing because it's a combination of the first two columns. Okay, it's neither here nor there, so it's a little bit confusing for most students. So the third column, we call it the 10E company. All right, now it is still called investment holding, but 10E company, right? Which means to say they will still hold on to the property. Okay, so if they hold on to the property long term, all right, the property is what we call the non-current asset. Now, if they were to sell the non-current asset and they make a gain, it will not be taxable, right? So it is like the second column. All right, now, however, okay, if they were to if we were to earn rental income, right, the rental income will be taxed under 10(1)(a). Okay, so you know that is actually a combination of the two. So in exam, how do you know whether the company in the question is investment holding company? So we simply look out for this term, right, this phrase, right, which is here. If you see wording like this, right, the company is carrying on business of making investment, then it is simply telling us that it is a 10E company. Now, what is the tax treatment? Right. Now, for expenses, well, you can deduct. However, you have to ensure that expenses is actually incurred by that particular investment, right? So what am I trying to say here is this. So let's say you have two properties. So this is property 1 and property 2. Sorry, this is the best I can draw for for house. I'm pretty bad in drawing. So well, let's say the first property has no income, but they do incur expenses, and the second company earn income, rental income, and they incur expenses. So this expense you can deduct against this income, right, of that property. So the expense that you see here must be actually linked to that property here, and you are not allowed to use this expense to deduct against the income generated from another property. So that is what I'm trying to say here. All right, in expense incurred on income producing investment are deductible only against such investment. That means only deductible against the same investment. Okay, cannot use to deduct against another investment. And if there's no income, you basically cannot claim any deduction. So which means to say these particular expenses will be forfeited. Okay, now what else you need to take note? For losses, it will be totally forfeited. Okay, in the event if you have unabsorbed losses. Okay, right, it will be forfeited. So you can't do anything with it. Now, the only thing that may not be forfeited is this part here. Okay, you can still claim lost item under group relief from other members of the same group. That means to say, now you are accepting losses from perhaps your transferor company. So that is the only situation whereby you can still take in losses. However, this is a separate topic, so I'm not going to talk about it too much. And what about CA? Can they claim? Yes, because they're earning 10(1)(a) income. So they are still allowed to claim CA, but in the event if you have unabsorbed CA, right, unabsorbed CA, you cannot set off against other income, you cannot transfer, you cannot carry forward, so it will be forfeited, right, just like the losses. Okay, so that is what I want to say for this topic. Thank you.